Alright guys, so let's talk about de-dollarization today, and things are just getting crazier. Now ever since the G7 confiscated Russian money, this eventuality was baked into the cake, and we have said it many times before. Biden did the US financial system a big disservice by working with Europe to immobilize Russia's assets. But Trump didn't do a rollback either. In fact, the tariffs just further emphasized US overreach. I personally feel weaponizing the consumer market is on par with Biden's mistake. And here's what's on the line. Foreigners hold nearly 19 trillion in US stocks, 7 trillion in US government bonds, and another 5 trillion in credit assets. In treasuries alone, that's 30% of total outstanding debt. It's an incredible amount that is at risk the longer this trade war continues. Now, Trump loves to poke at the deficit, but he forgot about the capital account surplus the US enjoys, and that's why borrowing costs were so low over the past few decades. However, beyond just central banks dumping US bonds, there's another threat on the horizon we must discuss. It's going to put further pressure on the bond market. Brazil is now looking to issue panda bonds to borrow money. For many emerging markets, the norm is to borrow money issuing US bonds, so this move signals a big shift away to the RMB. Now, when countries borrow money, it's normally through two mechanisms. One is through their local currencies, and this can be bonds denominated in euros, yen, or Canadian dollars, depending on your country. Now, the second option is to issue debt denominated in dollars, US dollars. And for many countries, there are big advantages in doing so. They get to access a bigger pool of capital because the dollar is the reserve currency. Many investors out there, they hold dollar assets more than anything else. So if Brazil issues dollar bonds, there's also no currency risk for these investors. So they will demand lower interest rates or yield. Now Lula can borrow more money at lower rates if he can get the dollars. And normally that shouldn't be a problem. Brazil is a big exporter to the world, and they ran a trade surplus of $74 billion in 2024. The dollar is the main trading currency, so the majority is in the USD. They can basically mortgage their future surplus earnings for money today to spend. I will borrow $1 billion today because my surplus will generate that down the road. However, things are changing. Trump's tariffs are going to tear apart the old playbook. And if countries start issuing fewer bonds in dollars, it weakens the usefulness of the greenback. Now, it's critical we understand how global trade affects dollar assets around the world. But first, let's have a negative example of how the trade deficit works, courtesy of Trump himself.
We had a trade imbalance, we had a deficit, or they had a surplus, another way of saying it, of more than $1 trillion. Think of it, more than $1 trillion. And because of 145%, that's the only reason, but because of they have now 145% tariff, there's no trading. You can't trade with 145%. We are therefore making, in a certain way, I guess, $1.1 trillion. In other words, we're not losing $1.1 trillion.
The US doesn't make $1 trillion by cancelling trade with China or any other country. That's not how economics work. But what does happen is that dollars from US consumers stop flowing to exporter countries, which is the big problem for Brazil that relies on pushing products to the world. So if Brazil issues dollar bonds, can they earn back the currency down the road? Borrowing in the RMB is also cheaper. They recently sold a 10-year dollar bond at a yield of 6.73%, much higher than what the US Treasury is borrowing at, which is around 4.5%. As US yields rise higher, Brazil would have to pay 7 or even 8% down the road. Borrowing in the RMB could be as low as 2% to issue a 10-year bond. That's at least 3 times cheaper. Now sure, there's currency risk, but China has to keep the RMB within the trading band for the foreseeable future. However, the US dollar is extremely volatile. While it is collapsing today, we have no guarantee that it will continue to collapse all the way down, right? We have no idea what comes next. Trump's tariffs might get thrown out after the midterms, or when he leaves office, then the dollar could spike even higher. Or interest rates in the US might continue to rise. Brazil would have to pay even more to borrow money in dollars. But there's also another big incentive. Brazil is one of the few countries that have a trade surplus with China. They sell more to Beijing than what they buy. They enjoy a trade surplus of 313 billion RMB, or $44 billion, and this amount will only continue to grow as China stops buying US grain and food exports. All the business will hit to Brazil and grow their trade surplus with China. So you can see how dangerous this feedback loop is for the US. As China continues trading more with the BRICS, the odds of them issuing more panda bonds just grows. And that's why Trump's reshoring plan and tariff war has serious trade-offs. Yes, you can bring home critical industries. That will mean cutting off global trade, doesn't it? As a consequence, the dollar's reserve status will get compromised. Other currencies like China's RMB will rise in prominence. So Besson can't maintain dollar strength, the reserve currency status, and low bond yields all at the same time. Something has to give, something will be sacrificed. But here's another problem Besson faces. He wants China to rebalance their economy. Now, he has said it many times in the past, and here's a good reminder of this.
President Trump wants to rebalance the American economy back to a manufacturing economy with high precision manufacturing. I think everyone agrees, including Chinese leadership, that they need to rebalance towards more of a consumption and consumer economy. And the dream scenario would be if somehow we could do that together.
But really be careful of what you wish for. The Chinese economy is now reaching a point where they have to launch the stimulus boats. Now, unlike the US where inflation is still a problem, China has the reverse situation. Prices are falling in China. Now, that's great for consumers, but there's also a limit to how much it can fall. Economists are forecasting China's CPI to hit only 0.3% this year, and that puts it close to a deflation scenario. But that also signals Beijing's hand will be forced to fire the stimulus bazooka. If the trade talks between the US and China truly collapse, there's only one outcome. Beijing will have to launch big stimulus measures to flood the economy with a lot of liquidity. There will be no choice left. Unlike the US, China does have the breathing room to work their magic. Having a low inflation rate means an economy that can absorb a ton of liquidity without spiraling into a crisis. According to their state media, the PBOC might bring down the reserve requirement ratio, the triple R in their banks. That will spur more loans and support growth. The Chinese government could also re-enter the bond market and flood the entire economy with money. Yields could also drop further. So if China rebalances and Trump isn't ready for it, the shift will be disastrous for US financial markets. And when I mean ready for it, I'm pointing to the federal deficit, the curse of endless government spending. Now, the debt situation in America is the exact opposite of China. Long bond yields rising is not a good thing amidst Trump's trade war. It's a signal that investors are shunning US debt. They are afraid of structural inflation, the dollar falling, and the deficit spending rising, maybe all three at once. So imagine if China starts consuming more and increases their imports. The demand for Chinese assets will rise and compete with the treasury market. Countries issuing RMB panda bonds is just one avenue. China issuing their own bonds will be another. So what can the US do to reverse this? Simply supply and demand. Besson can forget about growing demand for US debt, especially during a tariff war. Foreign demand might not recover in the immediate term, it might never recover. So the only solution left is to reduce the supply of US bonds to the market. So the government has to spend less, and that's why the big beautiful bill is such a big gamble. But let's shift gears a bit and talk about the big update regarding Russia. As we all know, the oil sanctions are still in effect. Trump wants to end the war, but the EU wants to fight till the bitter end. And we have von der Leyen looking to punish Russia once again. Now, the EU is planning to cut the oil price cap from $60 down to 45. In addition, she wants to ban the use of Nord Stream 1 and Nord Stream 2 gas pipelines, so no Russian gas can flow to Europe. The same playbook, right? Cut down Putin's revenues. At this point, I have no idea why they want to do this now, especially when you are facing a 20% tariff war from Trump's trade war. The cause and effect is quite clear. If you cut away cheap Russian energy, especially now, you raise the cost of production. Your products get even more expensive and selling to the US will be even more impossible. The only winner here will be China and Asia. Putin will reroute his energy shipments there, and the last 3 years should have taught Brussels everything they needed to know. Well, it seems a G7 ally is rejecting the idea of banning Russian crude. Russia's shipments rose over the last 4 weeks. Countries around the world, including Japan, they are still buying crude oil from Putin. A Japanese refiner has broken a 2 year drought and has finally decided to buy Russian oil. It's just pure economics. At the end of the day, price matters. Energy is the baseline input into any country, especially when it comes to manufacturing economies. China, Vietnam, and Japan, they all need a ton of energy imports. And this really highlights the fatality of sanctions. Countries look after their own interests, and Japan has no choice but to go for the best deal. They bought a cargo of 600,000 barrels and it was a tanker on the blacklist. But Japan is special. They have a waiver way back from the Biden administration to buy Russian oil. They have US permission. They can also use sanctioned ships for the delivery. So if Europe really wants to enforce their ban on Russian crude, they might have to sanction Japan as well. And that's why sanctions are just so messy. Even your friends won't listen. Japan imports 80% of their energy, and for oil, their dependency is over 90% for imports. And considering the state of their export game, Japan needs all the help they can get. We are now in the Hunger Games, every nation for itself. Since February, Japanese export growth has been dropping, and in the first 20 days of May, the plunge finally went negative. Japan's exports fell by 3%, which is a lot for a manufacturing economy, and it could get a whole lot worse in June thanks to Trump's steel tariffs. Over $1 billion in Japanese steel exports will get hammered, it will get affected. And Trump might not drop the tariffs at all. Even a baseline of 10% will force Japan to rethink their entire strategy. So the only way left is to reduce their input costs. And energy is a very important component, especially when you're running heavy industries. Remember that Japan isn't just selling to the US, they are competing with China in the global market, and that's a fearsome competitor that loves to slash prices. BYD, for example, is giving deeper discounts by as much as 34% last month. And this is the third year of the price war in China. The Chinese domestic market and regional markets are all affected. Japan simply can't compete with a price war unless they get their costs down. Companies also have to endure lower profits. Japanese subsidies on energy are also dropping. They won't last forever. It's no surprise why Japan is suddenly so pragmatic. Buying Russian oil now is no longer unthinkable. It's a serious option. So going forward, we can expect more countries to maintain strong demand for Russian energy. Putin's revenues are not going to collapse, and lowering the price cap is also not going to work. But as always, let me know what you think. Will BRICS start issuing more RMB bonds? And will Japan continue to buy Russian oil? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.